All right, let's dive into an analyst's detailed playbook for what could be Bitcoin's next big move. We're going to break down the data, look at some fascinating historical patterns, and pinpoint the critical price levels that could seriously shape the crypto market for months to come.
Let's just get right to it, shall we? After that huge drop from its all-time high, Bitcoin's showing a little bit of life again. But the big question on everyone's mind is this the start of a real rally, or is it just a temporary bounce before we see another big fall? I mean, that's the multi-billion-dollar question, and right now, the market is completely split on the answer.
So, to cut through all the noise, we're going to zero in on one single data-driven analysis. Let's forget all the hype, forget the fear, and just look at a historical roadmap that Bitcoin seems to have followed again and again through its cycles.
And here it is, the core idea, straight from the source. The argument is that this recent price strength, well, it's not a return to a bull market. Instead, it's actually just setting the stage for what's called a lower high, a peak that fails to break the last one. Historically, that's a huge signal that there's more downside coming. And this whole setup has a name. It's a counter-trend rally.
So what exactly is a counter-trend rally? Well, think of it like a ball bouncing down a flight of stairs. Yeah, the overall direction is clearly down, but you get these little upward bounces along the way. In the market, this is a super deceptive relief rally that can look really appealing and trap hopeful investors right before the main downtrend kicks back in.
To really get why the analyst sees this as just a bounce, we need to crack open the historical playbook. Because while every market cycle has its own quirks, the underlying human psychology, the patterns, they often repeat. So the question is this time really different, or are we just watching the same old story play out again?
Okay, now this is where it gets interesting. Because at first glance, things actually look kind of bullish. Right now, Bitcoin is holding on to about 74% of its peak value. If you look at the same point in previous bear markets, it was way lower, just 65% in the last cycle and a measly 41% in the one before that. So, you got to admit, Bitcoin is showing more strength this time around. But that's not the whole story. Because even with that stronger price performance, other patterns are starting to look eerily familiar. The market has gone really quiet, entering a period of low volatility, almost like a spring coiling up. And historically, these quiet, sideways periods, they don't last. They're usually the calm before a really big move, either up or down.
So how can we possibly predict which way that spring is going to uncoil? The analyst points to a very specific set of tools, moving averages. A great way to think of these are like the market's lines of gravity. They show the average price over different time frames, and believe it or not, they often act as predictable barriers. Now, for anyone who's not deep in the weeds of technical analysis, a moving average simply calculates the average price of an asset over a set period, like 50 weeks or 200 weeks. It just helps smooth out all the chaotic daily price swings so you can see the real underlying trend. And these lines become these huge psychological levels of support where prices tend to bounce, or resistance where prices get slammed back down.
And this slide, wow, it lays out the historical pattern perfectly. It turns out, previous bear markets have followed this incredibly consistent four-step dance. Step 1, the price breaks below the 50-week moving average. That's a major warning sign. Step 2, it drops until it finds some temporary footing on the 100-week line. Step 3, from there, it stages that counter-trend rally we talked about, going back up to test that old 50-week line, which has now flipped from a floor to a ceiling. And finally, Step 4. After getting rejected, the price begins its final descent toward the 200-week moving average, which has, historically, marked the absolute bottom.
And I want to be clear, this isn't just some one-time fluke. The analyst really emphasizes that this is a recurring theme. It's like a signature move for Bitcoin during these phases of the market. The path from the 50 to the 100 and then all the way down to the 200, it's a well-trodden road.
So where are we right now in this whole four-step process? Well, as you can see, we're right at step 2. Bouncing off that 100-week moving average. So if history is any guide, if the pattern holds, the next logical move is step 3, a rally back up to test that 50-week moving average as resistance. And this is where that historical roadmap takes us, from just observing the past to actually making a prediction. Based on this repeating pattern, the analyst has laid out a pretty specific forecast for where Bitcoin could be headed for the rest of this year.
And there it is, stated as clearly as possible. The final destination for this bear market, according to this analysis, is a test of that 200-week moving average, the historical bottoming zone, sometime before this year is over. So, visually, the path could look something like this. The bounce we're in now continues, forming that counter-trend rally into the first part of the year. Then, that rally runs smack into a wall of resistance. Sometime around summer or the third quarter, a rejection from that wall could kick off the next major drop, ending with that final test of the 200-week moving average late in the year.
And that wall of resistance is the most crucial part. That 50-week moving average is currently floating right around the $100,000 mark. That is the single most important price level to watch in the coming months. It's the battleground where this entire thesis is either going to be proven right or completely wrong.
You know, any good analysis has to include what would prove it wrong. And the analyst is very, very clear about what it would take to invalidate this bearish outlook and signal that, hey, maybe something different is happening this time.
It really all comes down to two potential outcomes, right at that key moving average. If Bitcoin rallies up to that line and gets rejected hard, it confirms the historical pattern is playing out and the bear market is still on. However, if the price manages to break above that line and, this part is really important, gets multiple weekly closes with strong momentum, then the thesis is busted. That would be a huge sign that the bulls have actually taken back control.
So this is it. This is the ultimate dividing line. A decisive rejection from this level would be, in the analyst's own words, the nail in the coffin, confirming that the larger downtrend is still very much in play and that final drop is still coming.
Okay, so let's do a super quick recap of the whole playbook. The core idea, this is probably a counter-trend rally in a bigger bear market. The roadmap is that classic pattern using the 50, 100, and 200-week moving averages. The key level everyone should be watching is that 50-week moving average, right around 100K. And if we see a rejection there, it could lead to a much deeper low later on in the year.
Which of course leaves us with that big, looming question. This analysis makes a really compelling case for history rhyming, if not repeating, all based on predictable market psychology. But, you know, with all the new players in the space and new market dynamics, old patterns can always break. I guess the next few months will tell us if we're all just watching a rerun or if we're in for a brand new show.